Chart Watchers, it's Greg Schnell and I'm here with the weekly market roundup for March the 23rd, 2019. Thank you for taking the time to join me. I'm going to pound through a lot of data today, so let's jump right in. First of all, world markets, we're going to do a big review of that. I think it's a cleanup in aisle 5. I think there's a lot going on over here, and so I'm going to spend some time on that. Industrial metals, I think, are a serious problem. Precious metals just might be the move, and I'll explain why, and it has a lot to do with the Nikkei, the yen, a whole bunch of stuff going on there, the tips. So that one feels very interesting to me, and I haven't had money in there for a couple of months, and so it might be the time now. Bonds, the new March Madness, yes, they are. I mentioned that last week. And I think they're going to continue to dominate the show here as the world interest rates go negative again. Hold your breath and keep the stops in place. That was a line I had up here from last week or for the last 2 weeks, and I think that pretty much played out. It all lines up for a major train wreck. Will it break down? I just don't know. But obviously the central banks will do everything they can to hold it up. But to me it looks very, very suspicious and very weak. Anyway, let's jump into the charts. Okay, so first of all I want to start with Germany. And this blue line here is the 20-month moving average, and when things are below the 20-month moving average, that is a big problem. And when the world is below the 20-month moving average, that's a big problem. So on the pullback last fall, the S&P moved below the 20-month moving average and gave us some serious implications for the charts, and then we had this subsequent rally. So the point I want to make here on the DAX is going back to 2000. When we fell below the 20-month, we touched the lower Bollinger Bands. We rallied up for 2 or 3 months and then unloaded. In 2008, we did the same thing. We fell below, rallied for 2 or 3 months, and then unloaded. And well, here in 2011, we fell below, and then we kept rallying. So that was nice. And here we've fallen below. We've also snapped a 9-year trend line. And you can look at all these long trend lines. And I've covered off the DAX extensively. There's articles in my blogs about the DAX correlation. Anyway, so far the chart is closing right at the low of the month. We've got another week to go, but this looks like a big selling candle to me. And so after rallying off the low for 2 or 3 months, here we go, and we can't get much more strength. Again, Germany leads the European markets for industrial output. And the problem is we're falling below zero on the PPO. And when that happens, usually that's very bearish. So anyway, watching it very intently. But to me, this is a big problem. And again, we've snapped this huge 15-year uptrend in momentum. I couldn't be more concerned about that. Okay, so here's the German DAX, and outside bar after 3 weeks of indecision. So we rallied up here. You can see it here. So we made higher highs, higher lows. Then we made lower highs and lower lows, then higher highs and higher lows. And now this week we made a higher high and a 4-week lower low and closed below it all. So to me, that indecision has resolved to the downside, and that's quite concerning. Now again, you can see that we did this once before, back in February, and then everything worked out just fine, and that was as we were trying to get through the 20-week moving average. Now we're at the 40-week moving average. So but the full stochastic has rolled over and rolled over. We saw this back in May of last year. Is a big concern. But the other issue I showed you on the monthly chart was kind of once we get to this point and it starts to roll over, usually the speed of the down move picks up. So as you go farther down on well, let's go back to the previous chart. As you go down on a bear market, so what you'll find is, the first breakdown is usually slower, and then all of a sudden really breaks down, and then these ones really pick up speed. And so here we have the kind of first breakdown, then we rallied up, couldn't make a higher high, and then broke down, and then here, and then we literally just went boom, 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 boom for another year. Now, again, when you break these big long trend lines, it means something to me. Lots of people are like, no big deal, but this 15-year momentum trend is problematic. You can see the only time that the PPO was below zero was 2001, 2008, and now. So I think that's a problem. Anyway, so as this goes, I'm expecting that the decline rate will actually pick up speed. Okay, let's jump into France, because we don't want to just do a, a world review here. Okay, so France is barely above or barely below the 20-month moving average, so that is a little more bearish for me. And again, all of Europe is like this. So if the whole continent's that way, that would be concerning. And again, this would I would call this a selling candle where it shot up and then is closing near the lows. We got another week to go, but I think this is where we're going to close. The French market on the weekly stopped right on the trend line for the last year, going back to May of last year. So this is pretty much textbook technical analysis, full stochastic rollover, PPO failing at zero. We saw this back in 2015 in October, November. After breaking below it, it came down, rallied back up for a couple of months, and then failed again. I think that's where we're at. Okay, the Dutch market. And what we see here is they're slightly above the 20-month moving average. Pretty small market, but so far a doji or a spinning top candle here where we opened the month, tested higher, tested lower, and are pretty much where we opened. Again, this is a big break of a 5-year momentum trend line on this chart. And if I just, bring this screen back in here, it's not going to let me do that. This long upward sloping trend line that goes on for, I think, 15 years or 20 years is breaking. And again, when all of these markets are breaking together, it's more significant. Now, you can see that we broke down here in 2016 briefly and then rallied out of the hole. Well, we've spent 6 months down here. So breaking this big trend line, for some reason I thought it went back to the 03. Anyway, breaking this big 10-year trend line I think is major. And again, there's a significant level at 500 for this market. We're at 540 or something. So PPO has broken its uptrend. If I went off the lows, we broke that a long time ago. But anyway, this looks to me like it's ready to break down again. So 1 week doesn't look so bad. It's where the 1 week is on the charts. So here's the Dutch market weekly, and you can see PPO is just barely above zero on the weekly. And if it was to roll over here, we've been going sideways for 5 weeks on the PPO, so the momentum seems to be lost. We got bear market signals. We're under 60. All of this suggests to me that we have made our rally top, and you know, if I was wrong, I'd get shorted out very quickly, or I'd get closed out of a trade taking the other side of this week's bar as a stop. Okay, Shanghai market, this one's really interesting. It's trying to break through this downsloping trend line going back 4 years. Of course, these bars have been really spiking higher, and it looked to me like it was going to actually be able to do that. We'll see if it does or if it just stalls right here. Again, the China trade stuff with the US I think is still in play, so that could cause some consternation. So we've had this these 3 weeks here where we're just sideways, so we'll see what's going on. There's some relative strength outperformance, which I have been interpreting that as bullish, and we'll just see if that can keep going. But if things start to roll over here, I'd be much more cautious on that one. Here's the Hang Seng 20-month moving average. We're above it, but look at this red horizontal support and resistance level, and we're pretty much right at it. If we were going to fail here, this would be significant. Anyway, so that one still looks okay. So Shanghai and the Hang Seng look okay. This is rolling over right at horizontal resistance on a weekly, all in here from last year. So if this was a fail point, this would be pretty dramatic. And you can see the histogram's pretty much built to top, and we're on the just coasting downward slightly here. From an RSI on the weekly, it looks like it's ready to roll over until we break through that 28,000. I think I shouldn't be too bearish, but I think that's coming next week. Nikkei, this is right at the 20-month moving average, and the yen. I talked about the Japanese market on my Market Buzz on Friday, but this is a huge setup for me that I think is about to fail. So anyway, we've got the market top, a double top here, 2018, 2019. We're under the 20-month moving average. Huge correlations between the Nikkei and the U.S. market. this uptrend line has been broken. Again, it's been broken on many of these things. Back here in 2015 when it broke, came down to zero and touched and bounced off. Maybe that's what we do again. I just don't think so. I think with all of these trend lines cracking and the momentum trend lines cracking, resistance showing up at important places, stuck below the 20-month moving average, I get the feeling that this is going to have a large exit. This is the weekly on the Nikkei, and you can see the consternation. This black trend line at 21,000. You can see a lower high and lower low on the PPO. But what makes this important is if momentum rallies up and then rolls over under zero, especially on this trend line, usually those under zero moves are pretty significant and pretty quick. So to me, we've got a double top in place. We've broken the uptrend line. Now we're trying to get back through support and resistance level around 21,000 and struggling to do that. We've gone sideways for 5 or 6 weeks, and you know, last week, so let's just zoom in here, last week, so we had a big outside reversal bar. We came down, made a lower high, lower low. This week a higher high and a higher low, but pretty much a doji on the week. And so if that was to roll over right now, I'd just say we hit our resistance level and down we go. For the Australia market, this one's really interesting because I was talking to somebody and they were very bullish on the Australia market. And I think it's a lot more like the Canadian market, and the Canadian market's starting to get pretty weak. For some reason, the finance minister wouldn't say that, but the charts are starting to tell me that. So anyway, what we see here is we have a topping structure with a high in January, then the high in July, and now we're coming back up, and it looks to me like this is going to top out here. So we have a doji for the month, pretty much. Well, I guess it's a little better than a doji. We've made a higher high and a higher low, and so far we're still above the open. We'll see how next week goes, but to me it looks like on this monthly chart that the upside momentum has waned, and over 3 weeks we haven't been able to make much progress. Again, we broke this 10-year trend line. We haven't broken this trend line on the TSX yet. So perhaps my bearishness is overstated. I did have a trend line coming through here, and basically it left out that it was just a little above the 2016 low, and it looked to me like we were going to keep breaking it again and again. I'm expecting this to be our final highs for the TSX in the next, or for the Australia market. Okay, so this is the head and shoulders configuration. You can see the PPO starting to roll over here. That is a big concern for me. I wanted Australia to kind of confirm the breakout in China and the Hang Seng. But I think what happens here is this rolls over. We're on our second lower high on the PPO. And just, you can see back here in July when that started to happen, then all of a sudden it starts to accelerate to the downside in terms of momentum. And while the market kind of ground sideways for a few more months, it wasn't long before it fell over. And again, I'm watching all of the commodity markets, and Brazil is one of the markets I'm worried about. We'll get to that chart in a second. Here's the TSX. So the problem I had for the TSX again was as you look at this chart here, we continue to grind, trying to get through here, and here we have the doji. And so this rally up, you know, a big first month, then a smaller second month, a very small third month. We're up against resistance here. From a bear market perspective, we could stay below 60 and still be in a bear market on a monthly chart, and on a weekly chart it looks even more significant. Here's the uptrend line where we've broken momentum, and if it rolled over right here, this would be extremely problematic. So here's TSX weekly, and you can see this bear market signal we got back in February, and Australia now has one. This is capped off at 60, and as long as we can't get through that, that's a problem. We're on our third week of lower histogram highs here, and to me it looks like, while this red line might be broken a little bit here, I think we're going to start to roll over. Price action was not very good, and so far this week we still made a higher low and a higher high, but I would just say there's a lot of overlap here, whereas in this part of the thrust, things were going very smoothly. Now we've got a lot of consternation for the last month. Okay, Brazil. So this is the big one that I think we need to watch as commodity country. And what we see here is last month it made a lower close, but a higher high. This month it's done the same thing again. We've got a higher high and a lower low and a lower close so far, and we're near the bottom of the bar. We have major divergence showing up. The RSI looks like it's capped out here. So this is typically how a market breaks down, where you get this divergence and then all of a sudden fails. So one of the things I was worried about in Brazil, this uptrend was really strong, and as it came up, as it rolled up here, it looked to me like it wanted to stall on the weekly chart. Well, it just kept grinding higher, and especially this breakout here back in January, it broke out with the rest of the world and shot up, and now we've had these kind of 2 months with lower closes. So that's why I think when there's a global push and then Brazil stalls, that's a bigger issue for me. Anyway, you can see this outside bar this week taking in 2 months of data. That's a pretty big concern, but this is the note that I think is most important. So this wave was below zero, so the potential for the next high to be the final high is pretty good based on the way I analyze the market. So anyway, here we come. We've rolled over on the PPO now, and with this rollover and again this huge outside bar, I expect this to roll down hard. So I think this is going to be problematic for commodities globally. Russia, this market looks very good. Tried to break out this week, and got above the prior high, wasn't able to close there and close back near the low of the bar. In terms of momentum, we're right on the trend line here. Very low slope coming out of the September lows in momentum. So I would just say we've traded in a tight channel here between 1050 and 1200. This week we tried to break out, and it looks like it was a failed breakout. Again, with the move in Brazil, I think this is coming back. So here's the S&P 500. We got our bear market signal back in December, and now the RSI got back up to 60, which is kind of what we would expect in a bear market. And again, in a bull market, you stay above 40 and range above it. And in a bear market, once you come down to 30, you stay below 60 until you get back up to 70 the first time, and that would suggest the end of the bear market, and you're going to start bouncing above 40 all the time. So the U.S. has been doing that for a long time. Even in 2015, we didn't get down to 30. So this was a little bit bearish, but as you can see, we managed to keep rallying. And now we're making lower highs on the RSI. I think this is a triple top right at the trend line. Terrible candle for the week here. Open, tested higher, closed on the lows. Our PPO has basically been at the same level for 5 weeks, so I think the upside momentum has stalled. And again, downsloping trend line on momentum here. If this got up here and rolled over right here, that would pretty much be textbook behavior, kind of like the same thing we did back in 2015, and we got up into this October-November period, spent 4 or 5 weeks, and then started to break down. So I think that's where we're at. And until I'm proven wrong, I would just say that if I was going to be short the market, if it got back above this 2850 or whatever this week's high was, then I would consider myself wrong in the interim period. But to me, it looks like this is about textbook based on everything else rolling. So monthly, the 20-month is still looking very good for the S&P. We're still below this trend line that we had back here. So, sometimes you get below and then you fire back above. Well, we had this trend line back in 2015. We broke it, and we never did get above, but we started a new lower trend line. And now here, this still looks okay, but I will say so far we're a doji on the month, or a spinning top, where we're kind of where we opened 3 weeks ago. And again, we've broken this long 2009 to 2018 uptrend, and we're starting to make lower highs and lower lows on the PPO, which would suggest to me that this starts to fail right about here. NASDAQ weekly, and again, I would say we're on the early. If I was wrong, it would be for being too pessimistic, and the market might have more bounce left in it. But I actually think it's the world pressure that's going to pull down the U.S. market. So this is the weekly for the NASDAQ, and that's a pretty ugly candle there with testing higher and closing right near the low of the bar and in line with last week. So I'd say there's a lot of rejection up at this higher price level. And coming down here on the PPO, we still have a declining highs line that's a little bit higher, so that could suggest this has more room to run. But again, I think most of it's tapped out. So there's the big picture for the NASDAQ on the monthly, and this is the NASDAQ 100. And again, we've broken this big upsloping trend line. And, you could still say, well, Greg, we could have broken it there, and we could have broken it there, we could have broken it there. I think the big difference this time is the whole world is breaking this trend line at the same time. So anyway, we're trying to rally back above this line. We're above the 20-month moving average. It bounced at 50, which is bullish. So this market by itself looks very good. This is not the market I would choose to short. Monthly chart still looks fine. I would just say that I think it gets dragged down with the rest of the world. Here's Greece, and the reason I keep Greece is it's kind of a gatekeeper for some of the weaker charts in Europe. And you can see this big downsloping trend line going back for 10 years. And we've rallied right back up to it again. And the PPO is right at 0. So if this was going to start to break out and turn higher, this would be classic, wonderful technical analysis. And you want to get long Greece here. If this rolls over after being back below 0 and gently trying to get above and then fails, this is more technical analysis saying, this is a particular swing point in momentum. If this starts to break this big uptrend again, I think you want to be much more cautious on I'll call it the smaller countries in the Eurozone. And then, so this is the weekly, and you can see, look at this beautiful push up here. I've had kind of 4 weeks where we just keep overlapping bars. Last week was an outside bar where we tested lower, tested higher, and closed near the high, so that was bullish. But this week we tried higher highs and closed near the low of the bar. This is our first lower histogram here, so just watching. But notice how the weekly, and remember the monthly, was right near 0. If they both rolled over here on both time frames, that would be quite bearish. And you can see this 60 level on the RSI is a rollover for me. So lots of these things are just yelling concern. This market is interesting, the Brazil market, or sorry, the India market. And the reason it's interesting is because we have this big high back here in August and September of last year. Last week we had a huge run up and then a doji week right as we get to this prior high. So watching this one quite closely, it wouldn't surprise me to find out that this week here was an exhaustion push, and then all of a sudden it just gives it all back. So anyway, watching to see if that's what happens, but that's what it feels like based on rest of world. Okay, England. And the one thing about England here is the bar tested to try and get above the 20-month moving average and is closed below it. It's in the middle of the range, so it's still a higher high and a higher low, and in the middle of the range, nothing too bearish about that. The big issue for me is we're right up against that downsloping 20-month moving average, and we're also right up against this big 20-year trend line. So watching it quite closely, and again, notice this wave down here on the PPO and sitting right at 0. So can it bounce like 2015-16, or does it finally roll over? And you probably wouldn't be surprised to find out I think it rolls over. Okay, here's the IBEX. This is the Spanish market. I need to decide either Spain or Spanish. But what you see here is we broke down for a couple of months now. We've tried to rally back up. We're still below the downsloping 20-month moving average. And we're below 0 here on the PPO. We've broken this 5-year uptrend line. So much like Greece, this one starts to worry me. And we're at the low end of the bar for the month. Well, it still made a higher high. Again, we've tested higher and have now come back into the range of the last 3 or 4 months. So we'll see what this week brings, but it doesn't look that positive to me. Here's the Kospi, and look at where it's rolling over. Big 10-year trend line level here. We were above it for almost a year, and this is South Korea. Came down, touched the lower Bollinger Bands, then rallied back up, kind of got to this friction level from 2011 and 2015, and has stalled here. And so far, we've tested lower this month. So we opened higher, tested lower, we rallied back up, and we're still slightly below last month. So if we can start to break above that, that would be a better candle. I still don't like the lower high and lower low, but to me, this resistance level is pretty formidable, especially with the 20-month moving average above it. Okay, so that's it for the world tour. I'm going to smoke through the commodities because I want to get into the gold miners and stuff like that. Obviously, the bond markets are a mess. I think everybody's kind of figured that one out this week. I think we mentioned it for a couple of weeks now. But anyway, let's get on to the commodities. Here's crude oil, and what we see here is crude is still trying to rally. I'll show you the XOP and some of those in a minute, but they're not following crude higher, so I think that's a false breakout, or crude's going to pull back at least. Natural gas looks weak and is below the 10-week moving average. Heating oil is been pulling back for the last month. We'll see if it can stay above the 10-week. Gasoline still looks strong here, but coming up to the kind of head and shoulders resistance levels up in here, around 190. Looking at corn, back above the 10-week, but we didn't have any of the similar response in soybean, so it's below its 10-week, and so is wheat. So 2 out of the 3 isn't good. Gold, I like this turn up here, moving back above the 10-week after testing below it and horizontal support and resistance. One of the reasons I'm starting to change my mind on the precious metal is that this might actually work out. We have this big downtrend in silver, and it rattled along here. We didn't get the bounce this week, but I've got some other charts in the silver sector silver area that I like. Copper died right where we would expect it to, up around this $3 level. It's testing the 10-week right now. Aluminum continues to go lower, so that doesn't look that good. Looking at livestock, this chart continues to shoot higher, so that's very bullish. Sugar and coffee, both of them are below the 10-week moving average, so as you can tell, the ag stuff just doesn't seem to want to get going. Here is cocoa breaking down, cotton turning up, and it had broken this trend line a couple of weeks ago, just meandering higher. Marijuana, it's broken this uptrend line in relative strength, but it hasn't fallen off yet. Did have more selling this week, and I'm expecting this to roll over here. I think I've been saying that for a while, but I think this is your topping structure with lower momentum on each peak. And the scooter ranking has turned back down again, so if it starts to fall below 70, I think that might start to accelerate things. Coal and steel both had terrible weeks, and the reason they had terrible weeks is they're failing at this resistance level, and I think that's a bigger problem. We'll get into that chart in a little bit. And here's the steel ETF again, 2017, 2018. These are important levels, but just watch what happens when we unwind this chart a little bit. We're right back to these same levels that caused problems in 2013 and 2014. And you can see up here on the coal ETF, that would have been support going right across to this 14 level. And so starting to break down below that was a big problem. And here we are. Looks to me like we're going to start doing the same thing again after getting rejected over the last couple of months. Lithium broke back below the 10-week again, and rare earth strategic metals have rolled over again. So this area just can't get going. And I also saw FAN and TAN didn't do very well, the solar and wind ETFs, so those are starting to be more concerning. I don't want to go into these individual indexes. There's just nothing really there for us. Let's get into XLE, and you can see that this was trying to get through this resistance level, call it 64.50, and shot up, and then this week gave it all back and got down to 65.50. We're losing momentum here on the rally, so we're making lower highs and lower lows as price makes higher highs and higher lows, so this divergence suggests to me that we've got problems ahead. Crack, had a really bad candle for this week. It broke out above the prior 2 months and then tested higher and closed right near the low of the bar and back underneath the prior highs. And there was no real volume showing up either way. But again, this is below zero in momentum. If it rolls over here and we can see the PPO hasn't got much momentum going forward, that's just a very cautionary place for us. Oh, come on. Frac. This is another chart that doesn't look very good. And the big problem I'm having here is, again, we tried to break out this week. So remember, crude oil is up and to the right. Crude oil is like this. And this chart has just been flat for 8 weeks. So this fact that this can't follow on with crude and get stuck under prior resistance has me pretty worried. And again, with a bigger market rollover, I think that might be, it might pick up the pace to the downside. So we're right at the 50-day moving average. We'll just see if we can hold that. But this sideways meandering for 2 months doesn't suggest the exploration companies are going to be able to follow crude higher. So again, here's the slope of crude, and you can see that picture looks much more bullish. We're trying to break through this momentum trend going back for 3 years here on the daily, and we just seem to keep getting stuffed here. So we'll watch and see if we can get through. But if this rolls over, I'm expecting a pretty big sell-off in crude related stuff, companies and oil services companies, that kind of thing. This is the line using crude, just bigger picture here going back. What you'll see here is, this was the 50% line of this whole move, and we're pretty much at it, 59.59, and this is 60.39, right below the downsloping 40-week or 200-day moving average, failing at this red horizontal support and resistance level. So there's just nothing that gives me confidence that this is going to be able to pull ahead here. And here's the XOP. It's getting stuffed, much like frac and crack were. So none of those look good. Okay, natural gas. This chart, it's tried to bounce off this 255 support level. It's under the 10-week moving average. Notice how natural gas surged in the fall. Part of that was it doesn't correlate to the S&P, so lots of people like to go into natural gas as an uncorrelated asset. So as the S&P falls, this might take off. So I'd watch that for that sort of thing to happen again. If it gets above this 290 level, I think we could see another pop in natural gas related. I'm not sure the companies will pop, but I think just commodity traders could probably push that around a little bit. Chesapeake, you can see this 2-year downtrend here just isn't getting any gas. So that doesn't work very well. The natural gas and the natural gas ETF, the ETF is right back at its 50-day. The price of natural gas is below its 50-day. The ratio looks like it's rolling over. It's definitely making lower highs. And here's Cabot Oil and Gas, and it's been trying to get through this 26, 27 level, and it seems to me like it's just stalling here again, much like the crack and frac ETFs. Nuclear, this is a more interesting chart. So we have this big broadening formation here, rallied right up against to the top of the line, and we've got some negative divergence where this is making a significantly higher high, and the momentum is flat here. Now, it's a utility, so these could probably continue to push higher. Wouldn't surprise me. That would be okay. For uranium, the uranium ETF, again, this is a weird ETF. There's some gold in there and Barrick Gold and other stuff. So here's Cameco closing its supply, and we just continue to hover around this level. One of these days it's going to break out, but it sure hasn't, and I've talked about it many weeks in a row. I think the one thing I'd like to see here is we've now broken this downtrend on the PPO, and if we could make a higher low and then push above zero right here, I think that would be an excellent time to get on board. And I think uranium and uranium stocks could be uncorrelated to the S&P 500 because they sure haven't been correlated so far. They've been in a downtrend while the S&P's been rocking. This is the chart of copper, and what we see here is a horizontal support and resistance level. So far it looks like it's going to hold, and it's stuffed copper right back here. And after trading sideways for 5 weeks. All of a sudden, boom, down we go. So an outside week, higher high, lower low, and close near the bottom. This looks to me like a full-blown reversal. I have a few more charts for copper that really shocked me when I started to look at them. This was one big one. Look at copper rolling over right at $3 here. PPO below zero. This was a big move down for another year almost. And this also timed with the top of the stock market in 2015. And here we are, copper rolling over as I think the stock market's rolling over. So wondering if it's going to be that good of an economic indicator, but rolling over right at zero. Again, all kinds of concern here as this might speed to the downside. So being very cautious on industrial metals. I think out is probably a better answer than cautious. Here is the uptrend from copper just on a daily line chart. And you can see this is pretty much rolled over. So all of the weekly or all of the daily closes in here were above this 32 level. And all of a sudden we've plummeted past that. Waning momentum here, no real divergence. It was making higher highs and higher highs on both the momentum and the actual price chart, but now it looks to me like it wants to go the other way, so it didn't even give us any divergence to kind of warn us of that. Steel, same thing. Look at this big horizontal red trend line. I mentioned it on the other one, but PPO rolling over at zero. Look at what happened in 2015 in May, or actually might have been a little later. This might have been June. No, it's May. And it rolled over right then, and down we went for a whole year on steel as well. So failing at the 40-week, which is what it did right here, failing at the 40-week at this horizontal resistance level is a pretty big deal. Here it was trying to break out, failed, and again in late spring. So I don't think we get the extra 2 months to rally here, or 6 weeks. This was a May, we're in March. But to me, it looks like this wants to roll over. It's back below its 10-week, stalled at the 40-week. PPO seems to be rolling over at zero, matching that copper chart. I just think all of this adds up to trouble. Aluminum's just weak. Here's the XME, which is the metals ETF for USA. And you can see the PPO's at zero and looking like it's going to accelerate lower now. There was some hope after breaking this year-long downtrend. We did get a rally, but on this one here, you see this was making higher highs. This was making lower highs on the momentum, so that was cautionary, and now we're falling below the 50-day moving average and closed on a Friday below there, so I think this just all adds up to a bad-looking chart. XMA, the Canadian version, has a little bit more gold in it, so it's sloped up a little bit here. Again, uptrend, now been pulling back for 6 weeks or so in momentum. The real question is, does this fall right away, or does gold hold it up and this actually turns and bounces higher? I'm not sure. Getting into the gold charts, which is one I really want to cover this week. Okay, one of the things that makes gold so interesting is the correlation to the yen, and we're going to go to that chart after we finish the precious metals here. But we had this big high, a 2-week pullback, and after that immediate pullback, we tested lower, closed right back near the same range the week later, and now we're gently climbing out of this hole. But the big thing for me is the Nikkei and the yen, and I just want to go get that yen chart now, whatever. I could just go dollar yen. So what we see, oh, what did I do wrong? Go grab that chart. So you can see this big push here by the yen. And one of the things, we had this sudden surge a couple of weeks ago in late December, and then we pulled back gently, but now we're sitting above this, just to pick a number, a 200-day moving average. But this looks like it's ready to go to me. And you can see this was a big rally, a lot longer pullback, a big rally, a lot shorter pullback. And it looks to me like this is getting fired to the upside now. Gold has a very high correlation to the yen. And I was trying to figure out if the yen was going to break down here or if the yen was going to turn up. And I think if the yen can pick up here and start to head higher, that is very bullish for gold and not so bullish for the Nikkei. So I'm thinking gold is getting set up here based on this weekly move on the yen here. that we're getting set up to go party like it's 19 or 2002 in gold. Okay, so gold has this downsloping trend line for 3 months. On Friday, it gently pushed above this trend line. That doesn't really make it a classic break. But pay attention here. Notice the PPO crossed a couple of days ago, starting to turn higher. The volume starting to pick up. Lots of things I like on this particular chart. And again, this base at 1280 held. So we've been wandering higher. We got a little bit of resistance right here at 1310. Let's see if we can get through here. And again, if this starts to pick up speed, I think it could really be a big, meaningful move. This is the big picture on gold, and again, we've been trying to get through this 1370, but now it looks like we've got this higher low in place. And I think as we're trying to backtest this trend line, if we can start to shoot above it here, that would be extremely bullish. Look at the setup here on the PPO. It was stalling kind of at the same levels as it has for the last couple of years. But a turn here and a breakout to the upside, that's extremely bullish. And let me just unwind the chart for a couple of periods here. So when we start to get the PPO staying above zero, this would be classic, bull market behavior for gold. And you can see over here we've stayed below for a long time. Well, now we had this dip down. We come right back up to the prior levels, and this is why it's so interesting. I will say that this PPO, or this is the percentage volume oscillator, and this is starting to turn back up. And you'll notice in the 09 low, that was a nice place to be. This 2010 low right in here. Took back off to the upside. So a lot of times after this big low level down here, there's a good chance that we could start to get a real rally. Now, these have all been stuffed here right back at the prior high, so I don't know if we have enough momentum, but I think if we get through this level with this PVO, still with lots of room to the upside, we could actually make a big run here. So I'm watching this very closely. I think it was one of the most interesting charts of the whole week in terms of trying to hold up. So the scooter ranking is up nice and high. That's a trend behavior change for the last 2 years where the scooters actually held up here against the rest of the stuff. Look at all these arrows where this just continues to roll over right near zero. Again, a breakout here, and I think we'd be on to bigger and brighter things. And it looks like the full stochastic wants to turn up above 50. That's very bullish. So I would like to see that a lot. GDX GLD, so this is comparing the miners to the metal, and what we see here, it looks like it's trying to break through this downtrend line. If this pops at all, that is a 2-year trend line. I'd love to see that pop, and that would get me excited actually about gold. Okay, GLD and SPX. So here we have gold starting to outperform the S&P, and then since the rally started, the S&P has underperformed, or gold has underperformed the S&P. If all of a sudden this starts to break out the other way, that might confirm my suspicions for a little more bearishness on the U.S. Stock market and bullishness in gold. And again, I don't want just relative strength, but the gold chart looks like it's set up to go on its own, and I think it's partially because of the yen. So we see GDX climbing out of this hole here. It's kind of back into the middle of the range, but getting this actually pushing up higher is bullish. If we could turn up above zero here on this ratio, that would be a trend change we haven't seen for 5 years. So this is a really interesting place on the chart. Noticing this big downtrend here, we had that same sort of example. We broke above, pulled back, and then took off. And it was the break above, pull back, and now if this starts to move here, I think this could be really, really big. And again, the U.S. stock market fell into February, but look at the rally that started in the gold miners. So this all looks primed to me to be the same sort of setup. So go through this weekend, try and have your gold stocks figured out, because I think there might be a big opportunity to step on the gas there. Silver, this chart looks exciting too. It's above zero. Now the real question is, it was accelerating down, but in the last couple of weeks, the histograms are getting smaller, but they're not dropping as fast as they were. So if this is coming down to bounce here, a bullish turn above zero, and I really want to be a part of it. Let's just call it something like this in 2016, where it was a big bull market run. We're above this downsloping trend line that's been going on for, well, basically since the top in 2011. If this starts to run at all, I think you want to be a part of the party. Silver here trying to beat this 3-month downtrend in relative strength. Look at the scooter change on SLV, where it underperformed for years, and now it's starting to break out, and it held up here for a while, which is the first time it's been doing that, and now it's pulled back and starting to take off to the upside. So if I just unwind the tape here a little bit, the last time we saw this sort of piling up near the top end of the range here was back in 2016, and again we had a thrust, a pullback, and then it was a takeoff. So here's the pullback, and now it looks to me like it wants to accelerate again. So watching this very closely, I think this could be the start of a 6-month party on the silver stuff. Okay, silver downtrend, and again PPO right near zero. This is the silver miners ETF. If this starts to turn up higher, I'd be very excited to get on board this train. Okay, let's go up here to the overall markets, because I think there's lots of interesting data here. A little bit on breadth. The NASDAQ advanced decline line has put in a lower high. Now, back here in June, July last year, it did the same thing. But in September, October, it gave us a really nice signal that things weren't all quite well in Hollywood, and down we went after breaking this big uptrend line. Maybe it's too early. I don't know. I sure don't want to short the NASDAQ. But you'll notice that price is up near the prior high, and this is definitely not anywhere near the prior high. So to me, this negative divergence starts to tell me that things are weaker than we think. And here is the high-low, and it can't get above this 100 level, which is typically the same sort of thing we saw in 08, 09, 2011, 2015, 2016. So not enough price action there to get going. For the New York advanced decline line, this has actually made a higher high here than back in September, so that's more interesting. But this price action was trying to get through, and it looks like a failed breakout to the upside, and now it's broken the uptrend off the December low. So that adds to my bearish consent. Here's the high-low data. Again, can't get above this 150 level. We see this kind of thing when the market can't rally enough to get going. We were still up at 87, so that's lots of juice there. But I think the bigger question for me is I think that the overall market's having more trouble. I'm going to go down to options expiration. Again, that was last Friday. And so we consolidated sideways for the week and ended the week down. Look back here in September, we had the same kind of thing where we spent a week here, and then it really started to let go. Don't know if the same thing's going to happen. That's the way it feels. And the NASDAQ putting in this big reversal bar over here, the NASDAQ 100, I think that bar is bigger and uglier than anything we saw, with the exception of, say, early January. So finishing right on the lows, that is pretty darn dark, and I don't like the upside on that. Again, we had the Fed meeting, so this was right after the Fed meeting. And the other thing is the US dollar tends to turn a lot on Fed meetings. We'll see if that actually happened, but we had a failed breakout in the euro, so I think that might have taken place. This weekly outside bar chart is interesting this week, because for the S&P, we've been trying to get through this horizontal resistance level, basically got selling coming in and closed near the lows and back below the resistance. Same thing on the NASDAQ. It tried, closed back at resistance, so we'll see. But the Russell actually didn't even try and made lower lows. And that was a great clue back in September, as the Russell was breaking down before the overall market. So I think that dialogue is continuing. S&P 500, just want to show you there's been an increase in volume on all of the down days this week. So 1, 2, and 3, so 3 more distribution days. And look at the momentum curve on the S&P. That is a lot of negative divergence while the market is a lot higher. So that negative divergence suggests to me careful, very careful. Distribution days on the NASDAQ, obviously, it only had 1 this week, but it was a big one. That was a huge outside reversal bar, so not very good. And we had a lot last week, and then we've had just such a 10-day rally in the NASDAQ. Nobody could imagine that it was going to start to break down, but I think nothing like an exhaustion push Anyway, here's a horizontal weekly. You can see that on the PPO, if it rolled over here, it would still be below this trend line. That wouldn't surprise me at all. The New York Composite, this one I liked because it was one of the few clues that gave us lower highs coming into that September level. And as we topped out there, really started to break down, and again broke the uptrend here off the '09 lows, and it's still been making lower highs as we go here. Momentum is still waning on the long-term KST. Never ignore a monthly chart, but we've had a big trend line break here off of the 3-year uptrend. There's a really long trend line here that's in dotted to this 12,000 level. So we'll see if that holds. The '09 trend line, I would say, was broken here in 2015, and if I took one off here and one off here, we broke through that a while ago. So anyway, the bottom line is a rolling over of the New York Composite, and again, it's already below its February close. So we'll see where we end up on the week. Can't stare at a monthly chart too long until the end of the month, but all of these are at very concerning levels. So here's the monthly, again, made a higher high and a higher low, but so far is closing below the prior high and below the, well, at the 10-month moving average. So watch closely for this week to see where we finish up. The Russell, this is classic downtrending 40-week moving average, and we fail at it and start to break down. Mentioned it on March the 1st that watch to see if the Russell rolls over and starts underperforming. Sure enough, broke the uptrend line, down it goes, and rolling over below zero. That's just a really bearish sign for me. This is big picture on Russell. When we saw this PPO failing here at the end of these trend lines, that was a pretty important clue. Sure enough, down we went. We broke through support, came back up, fail at the 40-week, and start coming back down. Textbook stuff from 2015, from most breakdowns. That's kind of how it works out. So anyway, I don't like the Russell the way it looks compared to everything else, and it's very close. Wouldn't take much more underperformance to start making new 2-year lows in underperformance. That's just not good. Again, big picture on the Russell was a big uptrend, now downtrending, and a rollover for 3 or 4 weeks now. So it's not like this is news to the party, but rolling over below zero is just very uncomfortable. TSX, let's just hit it one more time. Again, just a line chart here. You can see momentum waning significantly while price is higher. This kind of divergence doesn't usually end well. You can see back in May, June, July, the divergence had been in place for a couple of months, and all of a sudden July marked our top, and down we went. Let's get into the currencies. We've got a few minutes left. So here's the US dollar, and again, which way does this want to break? It's a really tough one to figure out. Again, it whipped us sideways. So on this chart, it's still flirting with this 97.5 level, which is way up here, but look at this huge bounce. It made over a 1-cent bounce this week. So big reversal off last Friday, back above the 200-day and above the 65-day moving averages. Who knows which way the dollar wants to go? It's definitely trading sideways. UUP, this chart continues to be in this uptrend, and so you can see on Wednesday we got right down to it on the Fed meeting, and we've been rallying since. KSD had tried to get above this downsloping trend line. If it pulls back and keeps going, I think that's your breakout on the US dollar. The Euro weekly, look at this candle. So we open higher, we test higher, and then just literally come right back, and I'll show it to you on the daily, but really a big reversal move. And the DAX, of course, followed that down. We'll get into that one in just a little bit. So here's the euro, and I think on the next chart I've got the trend line actually completed on the daily, zoomed in here. You can see false breakout, and then literally just accelerates to the downside very quickly as the DAX breaks this trend line. There's just so much bearishness. Look at this hook on the top of the PPO just rolling over right at zero. So it's making it very difficult, but to me it feels like this wants to break lower, and I think Germany breaks lower with it. British pound, interesting after the week we had in Brexit. Basically had an inside week, undecided, closed slightly down from last week, but undecided. PPO right at zero, so another indecision moment. The yen I already covered a little bit, but here's the big picture again, this 2013 to 2019, and here's gold in the background, and you can see gold has been trying to push up a little bit. So gold started to turn up this week, and the yen moved back above its 65-week moving average. You know, gold has kind of been uptrending since we'll call it September of last year. But what's really important here is if the yen is going to start to accelerate up, and you can see how close this PPO trend line is for multiple years, I actually thought this might break to the downside. Now it looks to me like this little pullback here. We'll just see how it works out. Maybe this is the final hurrah and it rolls over. I don't know. But if the yen wants to go higher, I want to go higher with gold, and I expect the Nikkei to roll over again at this 21,000 level. Canadian dollar, very difficult here. Continues to drill in the right hand corner. PPO rolling over below zero, not bullish. Same thing on the Aussie dollar, drilling down in the right hand corner. Couldn't get any tighter on this wedge. We'll see which way this wants to go, but it tried to go higher, ended up closing below last week. So we have a higher high and a higher low and a lower close. Confusing. What does this PPO want to do? Still don't have an answer, but if this is going to break this uptrend and start to roll over again, I'm expecting commodities to go down, and that Brazil chart is one of the reasons. Okay, 3 minutes to cover an entire bond market. That's hard to do. We've got the junk bonds here pushing higher, but not very high this week. So this could roll over very quickly. Just keep paying attention to that one. The 7 to 10 year Treasury soared right back above this horizontal support and resistance level. So breaking the 3-year downtrend in the PPO, I think this is a huge deal, and I expect bonds to go much higher in price, lower in yield. Corporate bonds doing the same thing, taken off to the upside. Wondered what they would do at here, but we broke this 2-year downtrend. They look ready to go higher and continue. US 2-year, you know, these two rollovers kind of mark the top, and I was getting worried in here, and sure enough, I think this actually follows through, and it's a pretty good guide on the downtrend starting for the S&P. Here's the tips, and this is the yen, gold, and inflation-protected bonds. Look at this move in inflation-protected bonds, breaking this 2-year downtrend. These correlate, not 100%, but you can in general see the trend. So this push here suggests to me that inflation-protected stuff towards the yen anyway could be a big deal. Moving above zero on the PPO, we saw this in gold. So I want to be a buyer of gold and gold related. TLT, this obviously was the big spike move everybody saw this week, huge. And then BlackRock Muni Fund continues to go higher, telling me the direction for treasuries is higher. The 10-year yield, again, breaking these two upward trend lines. And remember, we're doing this in the market right now, and nobody wants to believe that this could roll over on the monthly charts, but this is exactly how things work. When all of a sudden you break these trend lines, it's surprising, and now we're starting to make lower lows and lower highs. Yeah, I think this has lots of downside left. The full stochastic's just breaking below 50. You can see back here, 2015 and 16, that was a kind of a bear market behavior. We're getting that same thing where the full stochastic is starting to break down. So I'm expecting lower lows in equities and lower lows in yield. 5-year breaking down, mentioned it a couple weeks ago already. So those are all going. I don't think we need to go through the 2 years, but let's just go find the spread chart. And the big thing on this one is, you know, everything just spiking down here. So I don't think we're at this early phase. I think we're back here in the October-November phase where things were starting to break down and we're about to go lower. So for the equity markets, I think more trouble ahead. Be very cautious, have lots of tight stops. Check out gold. I think that's the big opportunity coming out of all of this. Thanks, everybody.